is to record this session for probably about half an hour and have the Q&A going, and then we'll stop the recording and have members just have a general chat. So if it's all right with you, Iresha, I'll let you introduce yourself and get going. You've got control of the screen.
Okay, brilliant. Thank you. So thanks so much for this opportunity. So as Warren said, I'm Iresha Herath. I'm a new special counsel at Macpherson and Kelley. My background is in real estate and infrastructure. So I've actually been a general counsel for the last 10 years and been a ministerial advisor as a transport infrastructure advisor as well, and also senior associate at KWM in the property and infrastructure group. So quite significant experience in the infrastructure space, and happy to be joining the Macpherson and Kelley team in my move back to private practice. So what I was asked to do today was to talk specifically, as Warren said, about the impact of COVID-19, specifically in relation to commercial leasing. I want to try and make it an interactive session, so if people have got questions, please either pass them on to Warren or just shout out. I know people hopefully have had their microphones on mute, but feel free to jump in if what I'm saying doesn't make sense. We all know the enormous impact around the world that COVID-19, the pandemic, has had, and it's had in a relatively short period of time. I think we all get startled by the numbers, and if you go back, say, 3 months to where we were then to where we are now, is quite a different landscape. And as a result of that, in Australia, obviously there have been measures introduced from a health perspective to protect people, but also quite significant measures introduced to try and protect commercial operations. And one of the things that was introduced was the mandatory leasing code of conduct, which was introduced in relation to commercial tenancies, and that applies across Australia, but there's an expectation that each state brings in its own legislation to make that code law within the state, which Victoria has done. So what we're talking about is both the code of conduct and also the COVID omnibus bill, which not only affects commercial leasing, it affects a number of different areas of legislation that are impacted by the pandemic. So as I said, Commonwealth government announced a code of conduct for eligible commercial tenancies, and we'll go into what eligible means shortly. And the Victorian Act temporarily introduced a raft of changes to legislation in response to the pandemic. And it's had retrospective effect from 29 March 2020, which is seen to be the date when most commercial operations had to go into, for example, lockdown, and some potentially had to stop trading or limit trading or change basically how they were operating. And it is in effect for 6 months to 29 September 2020. And the reason for that is probably because it is to cover the winter season as well. Now, there is an expectation, and I think we all have it. Australia's certainly done very well in terms of its control so far of the spread of the pandemic. And we're all expecting some announcements to be made on, I think it's the 11th of May, by the federal government, and we may be moving to a different stage of restrictions. But I think the reason that the legislation is intended to apply for this period of time, as I said, it's covered the winter months and the possibility of the impact of the flu season and how that may interact with the COVID pandemic, but also to deal with the flow-on effect. So if we think about it, it's been quite an immediate effect, and it's been significant, and it's been significant across the world in a commercial context. But there will be flow-on effects from this, and there'll be flow-on effects for a while. So the Act temporarily has an impact for 6 months, but we can talk about how that may work through after that period as well. So the regulations are still to be made, and the reason that they're still to be made, regulations take longer than an Act usually, but they're going to actually codify what the Code of Conduct is. So they will make what essentially are the principles in the Code of Conduct legislation in Victoria. We expect that to happen. We don't expect there to be major changes. All states are essentially following suit in that regard. Tell me if I'm going too fast or I'm going, what I'm saying isn't making sense, please do interrupt. So there's overarching and general leasing principles that are covered by the code and that will be covered in the regulations. And the key one of these, which is obviously what we're talking about today, is that landlords have to offer reductions in rent as either waivers or deferrals. Essentially, it's a combination of the two, based on the tenant's reduction in trade during the pandemic. So we'll talk about that in a bit more detail shortly. Other benefits that the owners get for their property, reduced charges, reduced land tax, deferred loan payments, should also be passed on to the tenant. Now, when they say they're to be passed on to the tenant, the expectation is where they form part of the outgoings that are charged to the tenant, there should be a proportional reduction in those outgoings as well. So again, land tax won't apply, for example, in terms of retail leases, but in relation to other leases where that's charged as part of the outgoings, there'll be an expectation that there's a proportional reduction as well. Landlords can't terminate leases for non-payment of rent during the COVID pandemic, or what's described as a reasonable recovery period post the pandemic. So that's what I was talking about this 6-month period. We may have easing of restrictions. This legislation will go on for a 6-month period, and there may be an expectation that still some of these principles are applied even post that period of time. Tenants have to stay committed to their lease terms. Now, this is an important point because a lot of people have asked us, well, what's in this for the landlords? This is essentially very pro-tenant legislation, and that is true, but the intent of the legislation is to try and also protect landlords by protecting essentially the businesses that are in place in their tenancies. So the theory being, if we can allow for some sort of provisional arrangements that apply to tenants through the course of this pandemic and protect them in some way through that, then essentially at the end of that, they may be able to begin operations again and run their businesses from the premises again. And through that period, then essentially that's better than a landlord coming out of this with empty tenancy spaces, which we're already seeing, unfortunately. Most of us obviously are not venturing out of home, but when we do, we can see that there are already more to let signs up than there previously have been. So this is an interesting thing to see how this is going to actually play out. One of the protections of landlords is that tenants have to stay committed to their lease terms in substantial effect. Now, they can make adjustments to their leases in terms of what are considered necessary amendments. So they can reduce opening hours. They could even cease to trade if it's impossible for them to trade because of the restrictions that are in place. So, for example, they can't start performing activities there that are not, as an example, within their permitted use. So if, for example, a tenant thought, okay, well, I can't do these things at the moment. So, I mean, I don't know, one example that was put to us was beauty salons aren't allowed to operate, but hairdressing salons aren't allowed to operate. Now, if the beauty salon is within the permitted use, but the hair salon's not in the permitted use, you can't suddenly switch to a hair salon. You have to actually comply with the lease provisions substantially, otherwise the code will cease to apply. There's also a provision in the code, and which will be in the regs, which will say that the tenant should be provided an opportunity to extend their lease for an equivalent period of rent waiver and deferral period. Now, this is intended to protect both parties. Essentially, it's meant to mean that then the tenant allows the tenant to continue to trade for a period longer than it would have, and sort of takes into account the actual pandemic, but it also allows some certainty, hopefully, for landlords that their tenancies will continue beyond a point when they're being affected by these provisions. And the parties have really got an obligation here to negotiate in good faith. There's a level of trust that has to operate here. There's a level of transparency that's expected on both sides, particularly from the tenant side, because it's dependent on the tenant's actual business operations. So that expectation is there. So who qualifies? So I thought in the context is I'd only talk about SMEs in the context of your operations. So SMEs, small and business size enterprises with turnovers of less than $50 million, either for the previous or current financial year. So that's actually important because it's allowed them actually to bring in parties that would have had 50 million in terms of their previous financial year. So it's not just the current operations as well. They also must be an employer which qualifies for the job seeker scheme and actually has applied for the job seeker scheme. So that's SMEs whose businesses have an aggregated turnover, as you probably know, of less than 1 billion. And they estimate that their GST turnover falls by, or is likely to fall by 30% or more. Now, this is the point I was talking about before. The tenants have to provide relevant information and evidence to demonstrate that they're eligible for relief. That's really important. I think it's a reasonable thing for a landlord to request. They have to demonstrate that this impact is real. And this is a discussion point we're already experiencing with clients. So how do they show that? Show it by their business receipts, anything that is, you know, commercially not in confidence that they can show to the landlord to indicate that they have been affected in this way. Some tenants are not going to be eligible. They're not going to fall within these provisions. And the government has said that they've encouraged the code to apply regardless. Now, that's a question really, I suppose, ultimately for businesses. But the intention is to try and protect business both through this period. It will be favouring the tenants through the period of operation, but then on the other side of that, it'll protect the landlords in the sense that they will have hopefully businesses going forward operating and not empty tenancies. And we encourage tenants and landlords at the moment to engage in open discussions about your situation. Am I going too fast or anything?
Look, I'm fine. Good. I'm watching the questions, so I'll get to those at the end. I think you're covering them at the moment, so.
Fantastic. And yeah, there's obviously happy to take questions here, happy to give my details and for you to contact me and try and provide advice and share this. I know some of our formatting is a bit out of this presentation, but we can share the presentation as well.
And
so people talk to us.
For people to actually keep popping questions up. Yeah, thank you.
Fabulous. So some people, the questions we've already received actually at Macpherson and Kelley about eligibility, franchises. So how does it apply to franchise in a franchise capacity? It actually applies at the franchisee level. So not the franchisor. It won't apply to the franchisor because they're unlikely to fall within the eligibility exemption, but it will apply to the individual franchisees. So they can apply in their own right in relation to their operations. Different in relation to retail corporate groups because the expectation is they have significant parent companies that essentially run the operations of each of their operations through, for example, shopping centres, etc. So for retail corporate groups, it applies at the group level. And the question that's been asked of us is, will industries take a collective position? So, for example, will a particular type of industry, and I talked about the beauty example because that's one we've dealt with recently. No, there's no collective position. The expectation is that each tenancy will be treated on a case-by-case basis, and that's to allow the landlord relationship to actually work in that context. So it's got to be case-by-case. It can't be an industry position that will apply and force people into a position that's going to be untenable for them in the longer term. So the specific rent principles, rent is going to be reduced in proportion to the decline in turnover. So this is why the transparency part is really important here. And you have to have evidence of what this turnover change is going to be. So I've used a really simple example. This is obviously going to be more complex than this. The tenants pay $1,000 rent to the landlord per month. The tenants' turnovers declined by 50%, and they can show that over the period of the previous financial year or the current financial year. The rent payable is now $500. Now, you add to that also that there'll be a rebate of 50%, so the reduction of 50% will also be potentially on the outgoings as well. Now, it's not just $500, so $500 is payable by the tenant at this point in time as opposed to the original $1,000, but it's got to be a combination of waiver and deferral. So 50% of that 500 reduction has to be by waiver. So essentially the landlord is going to lose $250 per month under that waiver. But there is going to be a deferral payment. So the other $250 will still be payable to the landlord over the term of the lease, and it'll be amortised over the term of the lease or over a period of at least 24 months, whichever is greater. So this is one of the reasons they've said that they suggest people can extend their lease terms for the period of the waiver or the deferral.
Iresha, just one quick question that popped up. It's probably relevant right now. It's okay.
Yep.
Is the measurement of decline based on one period at the start of the JobKeeper calculation, or does it have to be constantly tested?
It's not one period, so it can be shown. You can take it over because they can look at it over the current financial year or the previous financial year. I don't think it's sufficient for them to show you 1 month's decline, for example, because we all know one of the things that has happened in the market is there's been panic reactions to things. Things have immediately happened and then things have changed. So I think it's quite reasonable to say to them, given the eligibility of the period for the legislation, that you show it to us over a period of time. Now, it'll depend on your relationship with the tenant and it'll depend on how long they've been in there.
Sorry, thank you. You may have already answered this, but I think the question may be more along the lines of, if you qualify for April or March to be down and therefore you're qualified for JobKeeper, then under the JobKeeper rules, you only have to qualify once for the whole 6 months.
Yeah.
Does the same thing apply for the rent principal? If you're down for that early JobKeeper principle, do you get the rent reduction for the whole 6 months?
Yeah, look, I mean, I think, again, it's a negotiation. So what they have said is they've suggested that it's, because it's based on turnover, again, you could say like they've qualified based on their turnover and that they've qualified in that period of time, and then how you negotiate how that's going to be paid over that period of the 6 months, we'd actually suggest that you actually allow for some form of review. So you might say, for example, for that period of the 1 month, if, for example, you do agree and it's a new tenant, they can only show you the receipts for that period of time. You might agree to that reduction for that period of time, but then you agree to actually have it reviewed based on what their turnover is. So if, for example, there's an uptick in business, they don't just get it held for that period of time. Does that make sense?
Yep, thank you. All right.
Yep. Does that answer the question?
I believe it does, but it wasn't my question, but we'll check at the end with the others. Thank you.
That's great. So as I said, the rent waivers must account for at least 50% of the rent reduction, and then you've got the deferral as well. So the other monetary principles, and we've talked about this in terms of outgoings, so reduction in statutory charges, council rates, land tax. We know that various authorities are introducing reduced charges in relation to buildings, in relation to tenancies, etc. Those things should be passed on to the tenant. That's the expectation as well, because essentially the tenant's still subject to the payment of outgoings and rent, and the outgoings are usually based on their proportion of the premises to the overall building. So the theory being, if the landlord is getting a benefit in relation to the building, then that should be also passed on to the tenant. They've also said, which is an interesting one, that they should also share the benefit in relation to any deferral of loan payments. Now, usually loan payments aren't part of outgoings unless there's interest on the building charged into the outgoings, but that's something that they have suggested be passed on. Again, I think some of these principles, it's important to have a very open discussion with your tenant and come to some sort of agreement. And that's, you know, obviously we're saying as lawyers we can help in that instance, but that is a discussion that we would suggest is an equitable one. So we don't want to put the landlord in a position that's completely ridiculous for the landlord, but trying to protect the tenant's interests as well in that context. Landlord can't impose fees, interest charges on rent waived or deferred, can't draw down bank guarantee security deposits for unpaid rent during this term. That's an important point. So for example, if they're unable to pay rent this time, they can't actually use the bank guarantee security deposits or impose interest for that unpaid money. And they've got to freeze any rent increases other than in relation to retail leases, which are based on turnover rent, because retail leases, the adjustment will occur based on the turnover. Turnover is reduced. That will also result in the rent adjustment. Again, jump in if any of this is not making sense. The one advantage that has been offered to landlords beyond the idea of the actual tenancy staying in place has been that the SRO has stated if a landlord provides tenants with rent relief, they'll be eligible for a 25% discount on their land tax. So that's obviously an attractive incentive for landlords, particularly if they've got multiple land holdings. And any remaining land tax can be deferred until March 2021. So that's intended to act as some sort of benefit to the landlord to protect them through this period as well. But essentially, as I said, it does appear as if it's very tenant-friendly legislation that's intended to protect tenancies and their businesses, but also protect landlords by ensuring these commercial businesses don't fall over and you're left with empty buildings at the end of all that. So sublease arrangements, we've been asked about that. Is the sublease assessed on the same level as the head lease? The regulations are going to codify this, but our understanding is that the head lease and sublease are actually going to be assessed independently. So you can make an independent assessment based on the head lease, and that may or may not be eligible, and then you make an independent assessment based on the sublease. Now, obviously, sublease income flows through to the head lease, so that's an important point, but if, for example, the sublease is dramatically affected, then the head lease can take that into account. And if an agreement can't be reached, either party can actually take the matter to mediation by the Small Business Commission. So that's one of the things that is going to be codified or has been codified in the Victorian legislation. So next step, so this is coming to the end of my slides, and hopefully there'll be some questions that I can answer for you in this context. It was a great question that came in today, which Warren, I might repeat again just to answer. So what do we recommend you do from here? You understand your businesses the best. That is obvious, and you know very well the impact that COVID is already having on your businesses. And we appreciate it's incredibly difficult times at the moment. It's difficult for us as a business as well. All businesses are being affected. We're working from home now. You can see in my lovely background, I see there's one excellent background of a Melbourne skyline here, but I wasn't able to do that on my presentation. So all businesses have been affected, and these tenancy discussions are occurring across the board. So it's important to understand what impact it's actually had, and to try and really be clear about what impact it has as a tenant, from turnover, from a landlord, of what you can and can't do in this context. So the VIC legislation is intended to provide clarity that the code does apply, but essentially you should take it as the code does apply. That's kind of the baseline principles. People have to act in good faith here. There is a level of trust here that will operate by the requests being made, the relationships you have, but also I think it's quite reasonable to expect there to be some level of evidence provided in that context. There is normally anyway under a lease in terms of certificates of currencies, insurance, etc. There should be in this context as well. The shared interest is trying to make sure that you're together at the other side on the pandemic. You know, obviously bad tenant is a bad tenant. If you're going to be seeking to remove a tenant, it can't be for lease rent provisions at the moment, but if there are other lease provisions that are operative and they're in default, then those can still apply. But this is specifically around rent issues. A good tenant is intended to try and protect them and you through the pandemic. We suggest discussions start as soon as possible. They've already started. We've already got, as I said, lots of requests in this regard, and we suggest those discussions occur. And already we're seeing, and I think Warren sent me through a pro forma document that had been produced that's actually been, I think, almost certainly provided by a lawyer and has already been provided by one party to another. So those things are available and can be produced. We recommend any agreements that are made during this period be documented in writing, because they can occur as variations as well, obviously, to the lease. It may not just be these things that are varying. There may be other things that are varying through this process, and we're obviously here to help. But Macpherson and Kelley is a multi-practice service law firm, and we specialise in SMEs, so we're obviously here to help you. But one thing I will say is a lot of this information we will also provide online, and happy to answer questions without necessarily opening files in the first instance that you may have today, or that you want to send through by email. We are here hopefully to help you. So that's the end of the formal part of the presentation. Warren, maybe I'll answer that first question that was sent to me, and then any other questions.
Yep, appreciate it.
So one really good question that came through this afternoon was that a tenant was in a situation with a landlord where they've essentially brought this up on a couple of occasions, but they're receiving no response from the landlord. So one suggestion that was put to the tenant was that they just withhold rent for the next month. And the question was put, well, we actually have, we act in good faith. This is the tenant's perspective. We act in good faith. We've been a good tenant. We don't want to be seen to just suddenly be in default and see what then might flow from that. So the way that I would address that is, rather than just taking the immediate extent of just stopping the rent, you actually draft a letter, and lawyers can help you with this, or you can draft it obviously from the tenant's perspective, saying, this is my proposal. So I understand the code has been introduced. I understand these principles now apply, and my turnover has been affected X in this way. Show some evidence of that you're able to release, and say that I propose that my next rent payment will be X amount based on the reduction in turnover. Please respond by X date. If not, we will assume that you've agreed to this and we will proceed on this basis. Now, the reason that we suggest you do it like that is, again, going back to this point, things should be documented, things should be transparent. You can say, right, well, I'm just going to start paying 50% rent if my turnover is down by 50%. But what you don't want to have happen is some kind of dispute then starts to come into this, where the landlord says, hold on a minute, now you prove to me that it's actually 50%. Or as Warren asked that first question, how long has it been 50%? Rather than going and taking that step without any kind of notice, we'd always suggest you try first to have discussions. If they're not being responsive, look, I've said it a number of times through the presentation, it's not necessarily very landlord-friendly legislation. So landlords may be dragging their feet a little bit, but you can go on the front foot by saying, this is what we're proposing. And we take this as being noticed that this is what we're going to do.
Thank you for that. There's a couple of in the chat box here, some questions. I'll just run through them if I can quickly. One interesting one, I might start with the interesting one first. It's the reverse. So we've got a question here about that some of these business owners also invest in properties themselves. So they're also landlords.
Yes.
And one actually has their tenant has been a very large company, such as a business such as Flight Centre, who just plain bluntly refuses to pay and negotiate.
Right, so the same thing applies. I think you can say, firstly, the question would be, would Flight Centre, and it may operate at a franchise level, I'm not sure of the Flight Centre arrangements, but one of the things to determine, and it may be already in the lease, is does it operate at a franchise level? If not, if it's operating as a retail group, then does it fall within the eligibility exemption? And again, you can do the same thing the other way around. Say if, for example, it doesn't fall within the eligibility guidelines, it's quite reasonable for a landlord to say, our understanding at the moment is you don't fall in these guidelines, you're not having any discussions with us about this intention, but to basically now have stopped paying rent. So we are issuing you a notice to prove why you shouldn't be paying rent in this context. So wouldn't necessarily issue it as a notice of default at the moment because of the code, but we can certainly ask them a notice of demand to show why they are no longer paying rent at the level that they're required to do so. Okay. So for Flight Centre, they may come back and say, well, we're a franchisee and we're eligible. But this is where the importance of proof, I think, is quite reasonable. It's entirely reasonable for a landlord who is going to take a cut through this process to say, show to us why you are doing what you're doing or why you're proposing to do what you're proposing to do. And if you don't fall within the eligibility guidelines, then it's about a discussion and really about a relationship between landlords and tenants. As I said, the government's encouraging people to say, let it apply across the board, but that's ultimately a business decision. And if it's a big retail group that doesn't fall within the eligibility exemptions, or if it's a retail group, for example, whose business has in some way been impacted in the positive by the pandemic, and we know there are some businesses that have been, then that shouldn't be an automatic assumption that this code applies. Does that make sense?
Yeah. One more question here, probably a couple more, but one interesting one, I should say. The question comes up, I'm not trading out of the premise at the present, I'm renovating it. Can the conditions still apply given the turnover from this particular premise is unaffected?
Okay, that's an interesting one. Well, technically, so the question I suppose you'd go back on is, have they actually applied for and received the JobKeeper allowance in that context? Because there is, in some premises, obviously, you can have rent-free periods while premises are being renovated, and also you will have no business operating during that period of time. So again, it's important to look at the eligibility requirements, and if there has been actually a reduction in turnover over a period of time that will satisfy that requirement, and then there's also the other requirement that's got to be satisfied just to fall under the code, then I'd suggest having the discussion with the landlord. And it depends how long you're renovating. I mean, for example, if you're not going to be planning to trade for the full 6 months that the thing is in operation, then it's hard to see how that would necessarily fall within the guidelines, because in effect, the renovation has nothing to do with COVID. If, however, the renovation, if, for example, you stop trading as a result of COVID and you use that as an opportunity then to renovate while maintaining the tenancy, then that's a different discussion.
Well,
does that make sense?
Just popped up. The renovation will be finished in June.
Renovation will be finished in June, and so then June to September, the legislation will still apply. So the expectation would be, now again, it will depend on the nature of the tenancy, but the expectation would be that the tenancy will continue. And if they believe at that point in time that it's going to have that impact, I'd start the discussions now and have a proper discussion with the landlord about what you think the impact is going to be. And then you might do some forecasts and then agree to some arrangement, which could then be set off if at a point it doesn't turn out to be that case.
Thank you for that. Just mindful of time for yourself and the rest of the group. I've got a couple more, but I'll try and keep them short. One is, if you've negotiated something differently with the landlord, do you think they have the ability to try and pull it back to only the legislation position, or should the agreed position that was already agreed be stay in place.
So is that question intended to be that you've actually agreed something that's more favourable than the legislation?
It seems to be, yes.
Yeah. I mean, the legislation essentially allows for kind of, I suppose, the minimum set standard here. If what you're actually getting is something above the legislation, you could almost argue that the legislation is covered by that arrangement and you're getting some additional incentive there. Now, I think if a landlord tries to come to you now and say to you, well, actually, you're getting a much better deal than you should be under this code of conduct, I think it's quite reasonable for the tenant to say, well, we actually agreed this as a commercial deal. You know, we negotiated this, we agreed with this in good faith. There were almost certainly reasons why it's been agreed in good faith. From the landlord side, you could try it. You could say to them, well, maybe what we agreed wasn't really a favourable deal, because the code of conduct is intended to be something that shows what might be considered to be reasonable across the board. So we could perhaps try and renegotiate this, but it's essentially, the bar is essentially the code. So that's the threshold. And from either side, you can try and negotiate that based on what your best commercial position is. Tenant will argue, well, you agreed to this. The landlord will argue, well, I agreed to this, but this shows that it actually wasn't a reasonable position. Ultimately, that will be a negotiation.
Okay, thank you. We've got a couple more people popping up some comments here, and there's a bit of interest. If you're okay, we'll keep going a little bit longer, if that's all right.
Sure, I'm fine. It's you guys. Yeah,
fine,
yeah.
Appreciate it. I think we know the answer, but it would probably be good just to comment on it. One of the questions comes up: does any of this extend to residential properties?
There is actually this code of conduct doesn't extend to residential properties. However, there has been in the Act various principles that will apply to residential properties, and I think I can't off the top of my head go in chapter and verse on them, but for example, there'll be preventions from people from ending tenancies, etc., for default of payment of rent, but it's a different structure. The commercial tenancy one is quite specifically for commercial tenancies. So commercial leases, commercial subleases, licenses essentially are covered under this.
Okay, I've got one more clarity question or comment more around the Flight Centre. It's popped up saying that Flight Centre is not a franchise.
Yep.
Have refused to pay any rent and refused to negotiate. We've offered a 50% waiver. So that's an interesting feedback.
Yeah, right.
And I'll just throw this up as a comment now for the whole group, and we'll get onto it later. There has been the last couple of days a bit of comment about large companies now putting their foot down on small companies and trying to squash them. Using bully tactics, but that's just an interesting comment there.
No, and I think that goes back to the point I was making earlier, like there is no justifiable position to argue it if they are not substantially meeting the lease terms. I think I said in the earlier part of the presentation, you could still argue that that will be the same because they're not falling within the code of conduct. So Flight Centre could come to the table and negotiate it, but if they haven't negotiated it and they're just not paying and they're not within the guidelines, well, that's a position that you can enforce.
I might just ask if Belinda's got a clarifying question. If you can unmute yourself, Belinda, I'll get her to explain the question. Belinda's got an addition to one of her questions before. Are you there, Belinda?
Yes, can you hear me?
Do you want to clarify your question with Iresha?
Yes, Iresha, basically, we negotiated something which we felt was pretty good with our landlord.
Yep.
However, it's a bit like an employment contract where you can't really negotiate to pay the employee a wonderful salary and say that you only get 2 days a year annual leave. I mean, there's a minimum standard. Yep. So in terms of how we structured what was negotiated, it doesn't deal with the outgoings in the way that you've discussed.
Yes.
We don't intend to, we don't want to change the position. We still think it's good for us. But is that something that the landlord could come back on us with if they're going to claim, for example, their 25% land tax deduction?
So you're talking from the position of a tenant.
Mm-hmm.
Yeah, no. Yeah. So the benefit for the landlord will be that if you are happy with the commercial position as currently negotiated, then you have the right to ask for a rebate on the outgoings in addition to what you've already requested. But this goes to that point that I was talking about a bit earlier, and that may have been your question. If a commercial position has been reached that's favourable and you're happy with that, my argument would be that you can stick to that position. You can still seek the threshold arrangement, so you can still seek a rebate on outgoings in addition to any other favourable things that you've got under this arrangement. But ultimately, that's a commercial decision in the context of your relationship with the landlord. So,
just to be clear, I don't want to reopen negotiation.
No.
My concern is that for the landlord to be eligible for the land tax deductions and that side of things, will they down the track potentially turn around and say, oh, that deal means that we're not eligible for the land tax deduction after all, because the deal doesn't meet these minimum criteria? So
have they applied that? Has there been at least a 25% reduction in your rent?
Yes.
Yeah, so they will be eligible just on the basis of the rent. So the land tax rebate will only be calculated on the basis of the 25% reduction in rent. The outgoings is a recommendation that's in addition to that, and the reason that they've done it like that.
Okay, so it is, the outgoings is quite a separate issue that's not going to cause them to be unable to get their, their rebates and so forth. Therefore, they're not going to want to reopen either.
No, that's correct, because the outgoings part of it is going to vary depending on the tenancy. So each tenancy is going to have different outgoings. So essentially what the recommendation has been is that there's been the same proportional reduction for outgoings, but it's not in the same way as rent. Rent is the key position, and that's the position that then leads to the rebate from the SRA.
If we can just leave that there, thanks for that.
Thank you very much.
And thanks, Iresha. If you want to take that offline, we can actually do that.
That completely answers my question. Thank you.
Fabulous. Thank you.
Final questions, because what I might do is just unmute all, and if we can just potentially do, or is there any more that want to type in? Because otherwise what we might do is just wrap this session up. There's no more questions coming in the box, and then we'll say thank you to Iresha. Thank you very much. Great session, very informative. We'll share it for those who couldn't get onto it. I'm going to stop the recording now. Iresha, thank you for that. If you've got any final comments or whatever, but we'll share connections if that's all right, so people want to reach out.
Absolutely. And very happy to, like I said, we can have initial chats before opening up any files. We can answer questions like I've done here today. I really thank you for the opportunity. It's great to be able to present, and especially being new to the practice, it's good to be able to come out and meet people, even though it's only virtually.
Oh, that's great. It's been great to have you. Thank you very much, and appreciate Macpherson and Kelley again with their support for BOAA. So
fabulous. Thank you. Thanks so much for your time.
Thank you.
Take care. Bye-bye.
Yeah, thank you.